Guys, we'll be starting the session in next 1 minute. Some participants are still joining in. And a small request, can people please turn off their cameras? Otherwise, yeah, thank you. So good evening, everyone. Welcome to today's session of After Hours with William O'Neill India. I hope everyone's doing well. And before we go ahead with the session, I would like to give a small disclaimer that any security that we'll be discussing today should not be considered as a buy or sell recommendation, and we'll be discussing it just for education purpose. So without much ado, let's start with Nifty 50 chart analysis for the day. So yesterday, the US market had a very strong closing in the range of 2.4 to nearly 3%, which led to a gap up opening of around 260 points in Nifty. But after that gap up opening, as you can see, Nifty consolidated in a very narrow range of less than 100 points. So after making an high of around 16,580 during the mid half of the trading session, it continued to trade lower, and it closed very close to the day's low. But overall, as we can see that Nifty closed above 16,500, which is a strategically good level. So talking about the top gainers and losers, the top gainers mainly came from the IT sector, as the IT sector advanced around 2.2, 2.3%. So as we can see, the names of TCS, your HCL Tech, your TechM, and your Infi in this, and all these IT giants gained by around TechM gained by around 3.6%, TCS by around 2.8%, HCL Tech by around 2.8%, and your Infi by around 1.9%. The other major gainers were ONGC around 3.7% and Reliance by 2.5% because of the reduction in your windfall taxes on your exports. Talking about the major losers, HDFC Life continued to lose post its result. So it again declined by around 2% today. M&M was another loser at 1.8%. Another from the auto sector, your Eicher Motors declined by around 1.1%. There were some other bank names and as well, such as a Kotak Bank declining by 0.8%, and pharma names such as a Sun Pharma declining by around 1.1%. Talking about the sector view, as I was talking about in the earlier slide as well, major gainers was from the IT sector, and you can see the standout sector this slide is your Nifty IT, as Nifty IT gained by around 2.9% for the day. The other two strong gainers were your Nifty FMCG and your Nifty Metal. So Nifty FMCG and Nifty Metal advanced by around 1.1%. Even Nifty Bank had a strong closing at around higher by around 0.7%. Talking about the losers for the day was the Nifty Auto around 0.2% down, Nifty Media 0.4%, and Nifty Realty but around 0.2%. So talking about Nifty 50's market status, as people who are following our daily mailers would know that Monday we took the markets to confirm the uptrend after Nifty advanced by around 1.43% on volumes higher than the previous day. But as we've been reiterating that the overall market breadth at that moment was improving. Major sectors were trading above their 50 and 200 DMA. Certain sectors were trading above the 200 DMA, but majorly most of the sectors are trading above the 50 DMA. And even followed through day was observed in your Nifty mid cap and your small cap as well. So overall, the market breadth was improving, and even the mid and small cap is trading above the 50 DMA, which is a good sign. So we took the decision, and so the Monday's move qualified as a follow-through day. And post those 2 days, Nifty has been climbing higher, and it's been a good trend up till now. And the next major resistance can be seen as your Nifty the 200 DMA line, which is the black line going forward. And as people know about William O'Neill's rule, once we are into confirmed uptrend, we start tracking the distribution days. So tracking of distribution days becomes really important to understand upon is there a weakness persisting in the market or not. So at the moment, distribution day count is 0. So distribution day definition is what any major market index, such as your Nifty or your Sensex, declining by 0.2% on volumes higher than the previous day. That's the definition of distribution day. So going forward, we'll be tracking distribution days as market isn't confirmed uptrend now. So as result season is going on, we'll talk about a few results and how markets reacted to them. So talking about one of the key results, it was Century Ply, and it was a good result. And as Q1 FY23 revenue increased by 94.3% YOY to 889 crores. EBITDA increased by 138% YOY to 143.1 crores. And even EBITDA margins expanded by around 290 BPS to 16.1%, and PAT increased by 194%. So on the qualitative front as well, to talk about the gross margin just declined by 140 BPS QOQ to 34.1%, as large part of the input cost increase in plywood and laminate segment was passed on, but certain amount is still there to be passed on, which will be done in Q2 as well. So EBITDA margin for the plywood segment came in at 10.4%, and the company is highly confident of achieving their 13 to 15% EBITDA margin for the plywood segment for FY23, mainly on account of front loading of A&P spend. So the company is saying that the major A&P spends for FY23 they did in Q1 FY23 itself. So talking about the expansion plans, Hoshiarpur is expected to come in stream by October 22, which will add to the MDF capacity, and even the greenfield in Andhra is likely to be commissioned in H2 FY24. So talking about the reaction, how the market gave for today, it was like once the result was announced, the stock was up by around 4.5% on really huge volumes. You can see the volume bar on the downside, the big blue bar. It was way higher than the average 50-day average volume going by. But the only negative we can see about the price reaction to the result is, during the intraday movement, the stock reclaimed its 200 DMA, but wasn't able to close above the 200 DMA. If it had closed above the 200 DMA, it would have been a very strong movement. The other big result was the Syngene Q1 FY23 result missed estimates. So the revenue increased by 8.4% YOY to 644.5 crores. EBITDA increased by 4.7% YOY to 172.8 crores. EBITDA margins contracted by 90 BPS YOY to 26.8%, and PAT declined by 4.4%. So talking about the guidance front that they gave in their investor presentation, so the company gave high teen growth guidance from the earlier mid-teen growth guidance for FY23. EBITDA margin guidance was intact at 30% for FY23. PAT growth is expected to be at single digit, and the company signed a 10-year manufacturing deal with Zoetis worth for $500 million, and this will position the company as one of the leading CDMO players in animal health globally. So talking about how the market perceived this result, as you can see, it was a stark downward reaction to it, and on very high volumes, and the stock is forming a double bottom base. But the green line that you guys can see, the stock found support near the green line, which is the shorter day moving average, your 10 EMA. So the stock found support near the 10 EMA, and whichever results that we were discussing yesterday, the Century Ply or the Sinjin, the market commentary or the con call guidance remains absolutely important going forward as well. So in terms of what kind of the qualitative aspects and the growth guidance and overall demand supply scenario the company is perceiving going forward becomes really important. So talking about some other key news, so NHPC signed an MOU, Damodar Valley Corporation, to explore formation of JV for hydropower Even UK CPI inflation was released today, and it came at around 9.4%, which was higher than the estimates of 9.3%. And but core CPI inflation came in line with estimates at 5.8%. So talking about the Morbi Association, so which is the Morbid Ceramic Cluster, which makes the ceramic tiles in the Gujarat region, is expected to be closed for a month on account of demand slowdown. So this Morbi cluster accounts for 50% of Gujarat Gas Limited PNG demand. So can be a negative for Gujarat Gas Limited going forward. Uh, Talking about the chart of the chart of the day that we'll be discussing today is BL. And again, I would like to reiterate that it's not a buy or sell recommendation and should be only considered for educational purpose. But the stock remains in our buy watch list as well. Initially talking about the fundamental front, last quarter results was above estimates, and the strong point about the company is the order book, which is at around 50,000, more than 57,500 crores, and even the order inflow for Q4 FY22 remained really strong, and it was at a 13-quarter high at 7,200 crores, and the company is expecting a 15% revenue growth with margin guidance of 20 to 22% for FY23. The company is highly confident of achieving this 15% revenue growth for FY23 on the back of a few projects or a few orders going forward, such as your Akash missile system, the QRSAM, and repeat orders of IRSAM missile projects and naval projects, such as sonar and communication system. Even why the company is confident about the 20 to 22% of margin guidance as well, because major orders or the major orders in the entire book is fixed price, which gives high not just revenue visibility but as well as margin visibility for the company as well. On the R&D capabilities as well, the company kind of invest upon 7.5% of the top line, and the company has a very strong product portfolio, which goes well for the company. Capex of around 6 to 7 billion will be spent in FY23, which will be spent entirely through internal accruals, and the company expects to remain debt-free in the time going forward. So the non-defense so the company is mainly into defense. So around 88% of the top line is contributed by defense and 12% by non-defense. So the company expects to take this non-defense portfolio to 20% going forward. So talking about on the ratings and the technical front, I mean, the good fundamental and the qualitative aspects is very well captured by the EPS strength, which is great at 92. As a group, the defensive stocks are also moving higher. As you can see, the group rank is great at 9. The buyer demand remains very strong at A+. The price strength is fair, but in the last few sessions on the right hand side of the consolidation base, you can see that the RS line is moving higher, which is a really good sign. A couple of days back, the stock did hit its pivot, but was unable to break out, and it's around 2% off highs and 2% from the pivot as well. So let's see if the stock is able to re-break out and is able to give a proper breakout on high volume or not, which can be a really good sign. So, Marish, do you want to add anything?
Yeah, thanks for that, Vaqar. No, so the guys, the result season is on, and heavy results are expected largely over the weekend. Next couple of days, a lot of mid-cap IT companies are going to report numbers. And over the weekend, you have obviously got Reliance, which is coming post-market on Friday, ICICI Bank, and obviously Infosys, which is reporting results on Sunday. So almost 30% of Nifty earnings will react on Monday morning. And therefore, how these numbers come out are going to be very, very critical. One take is that Reliance numbers this quarter is going to be blockbuster. There is no two ways about it in terms of how GRMs move. To add a little bit in terms of an element in terms of the windfall tax gain cut, you're actually seeing a 100-barrel kind of a gain. By gain, I mean some sort of an addition in terms of Reliance Kitties, though GRMs have fallen significantly. So they are trading around $7 per barrel, right from $25, which they average for the first quarter. but largely with Reliance's feedstock, which is around $3-4 outperformance every time. I think the base case that analysts have got anyway, between $10 and $12 in terms of reported GRMs. I think that can very well continue. But I think it should be a good set of numbers, at least from a results perspective. On a similar note, I think ICICI Bank's numbers should be equally good. The question mark will be how mid-cap IT companies deliver, because Wipro's numbers were below par at this point of time. The EBIT margins disappointed. The dollar revenue growth disappointed. Though they have given a reasonable guidance in Q2 going forward, I think the disappointment is continuing in terms of operation parameters. So how the mid-cap ITs, a lot of mid-cap ITs, including Coforge, Emphasis, Persistent, are reporting numbers today and tomorrow. And how Infosys probably reports numbers, I think a large element of how Nifty will react on Monday will be seen. Also to be seen is how the markets have a follow-through action. Now you've seen a very, very strong response to the Dow yesterday in the US or the US markets in general. Do they consolidate over the next few days? How do the macro data points actually play out? I think it's still a little bit hazy when it comes to recessionary fears, hard landing, soft landing. Interest rates are obviously going to go as per the trajectory that the market believes in. ECB also on the upward trajectory. You're seeing inflationary pressures built up in the Eurozone significantly as well. Expected to continue through winter. Because winter, I think how gas supplies will come through and at what cost to be extremely critical and important as well. And what kind of a hit does that have in terms of consumer discretionary spending? Because ultimately, discretionary spending, if that starts taking a hit, you're probably going to see some element in terms of GDP contraction and earnings contraction as well. So I think it's a lot of moving parts over the next few weeks. We're still not out of the woods as far as the macros are concerned. And therefore, I think we should enjoy, as we've always pointed out, even in the note, when we did our note on the follow-through day part, is enjoy the moment till it lasts. But we'll be very, very quick, as we pointed out in the note, in terms of entries and exit. We'll be looking at, if any, bunching of distribution days and exiting and cutting positions, or adding very, very selectively as well. So selectively, only those where good bases are being formed on the right side, earnings momentum remains strong, and they remain classically in stage 1, stage 2. Also, the point to monitor in markets like this is because we are coming out of a huge downward bias or a bear market of sorts from October, is to monitor closely the 21-day moving average as well. Because that is the first sign in markets like this. If that starts cracking, the 50-day also gets taken out, as we've historically seen, very, very fast. So the point here, again, be very, very selective in terms of entries as we are and are expected to guide you in this learning process that we all are in together. Exits, if there is a bunch of happening and there are global conditions and news, and because of the pullback that we've seen, any kind of profit booking that also happens globally and locally as well, maybe quick to probably exit certain stocks as well, which probably look a little weak, and they breached at 21 rising DMA as well. And third, and not the least, I think watching out for results, as I said, on this weekend to see how the market probably reacts on it. So that's from my side. So thanks, Vaqar. Thank you guys for tuning in. See you tomorrow morning for the pre-bell.
Yeah, thanks, Marish. And even do connect with us tomorrow for the Stock Darbar session at 4:30 p.m. same time for your sector and stock related queries. I mean, the joining details can be seen on our social media handles as well as on our MarketSmith India website. So thank you, and do connect with us. Thank you.